Good morning, everyone. This is David Blair, the Crosshairs Trader. I trust that you had a wonderful day yesterday and will today, both in and outside the charts. Just wanted to remind you, for those who are brand new, you're welcome to sign up to receive my blog post, which will also alert you to when these videos are published each and every day. You can do so on my website via RSS feed, Twitter, or email. One thing we're going to use today, since it is earnings season, is when I look at a stock for a potential trade, I always want to know when earnings are. Well, I've got a neat little earnings date locator on my site built in where you can just enter a symbol and it will give you a stock date, and we'll look at that in just a second. Okay, let's take a look at the market. You know, the last several meetings I've been talking about the market's just kind of lingering around, going sideways in an area of possible resistance. Let me bring up my two charts here, and you can see that. The weekly and the daily. Take a look at the S&P futures, and you can see that we have this area of resistance. Again, I know I sound like a broken record. I've been talking about it the last few days, but you can't ignore it when you're trading. Most of the stocks that we're watching are either going sideways or barely moving up or going down. They're just all over the map, and a lot of it has to do with the fact that the market is having difficulty right here. Did it right here, right here. So it's at an area where the market has to decide, are we going to reverse, or are we just building up strength to continue higher and bust out of this resistance area and head to our highs that came back in the spring? So that's what we're watching. You know, a lot of people get upset. They get into a trade, whether it's long or short, and it doesn't do anything for several days, and they wonder why. A lot of times it has to do with what the general market's doing. Okay? Now, when we look at the NASDAQ futures, we look at the NASDAQ futures, we know that they've already broken out of an area of resistance, but that doesn't mean necessarily that it's going to stay there or that it's just going to shoot higher for every week. It could pause, come back and test, which it's done this week. This is the weekly chart. But believe it or not, folks, the next areas of resistance for the NASDAQ futures are the all-time highs that we hit back in October of 2008. Can you believe that? All the way down, the world's coming to an end, and all the way back up. And you thought the market made logical sense. No, it does not. The market has a logic all its own. Better get used to it. So right here on the NASDAQ, I've got a little red line here. All that is the current resistance where the market just seems to be struggling to go up. But we've broken out of our year highs, which is right here. And all you got to do is look at a bunch of the NASDAQ stocks and see why we've broken up higher here. Apple, Amazon, Google, all of these shot higher. IBM. Okay. All right, let's take a look at a few individual stocks. Again, we've been looking at these for potential consolidation, building, ready to continue to go higher if the market decides it wants to go higher. Take a look at a few of them. MRO. MRO on the daily chart, let's take a look. You can see that it's been in a channel for quite some time, for several months. Just been going up and down, Can't decide which way it wants to go. It was very tight here for several months, then broke out a little bit, and along with the general market just kind of went sideways, and then here of late maybe breaking a pattern. You know, one of the things that I teach and talk about in my seminars and webinars is if it ain't broke, don't trade it. And what I mean by that is if there's a pattern, a consolidating pattern that's going on, and you see that, and then all of a sudden it breaks that pattern, that we don't trade it until it breaks it. And so now we're watching to see if this pattern is going to be broken, that MRO stays out of this consolidation area, consolidates up here now, and then gets ready for the next move, possibly up to some resistance at 40. That's about a $5 move, so we're watching that. The other thing we have to consider is when are earnings. So let's go in here and take a look at when earnings are. I think they come up in November, so right now we're okay. I think we've got a couple of weeks. Right here, November the 2nd is when earnings are for MRO. So one we're going to have to watch. It may not give us a trade before earnings, but notice that it is breaking out of that pattern that it's been in, and so we're watching MRO, oil stock. WLL, another oil. We traded this one, traded it up toward resistance after it broke out here, and now you can see what it's doing. It's kind of consolidating right around the $100 range, which is what we'd like to see. Let's see when earnings are on WLL. WLL's earnings are October the 27th. That's next Wednesday, so probably not going to have a trade on that. I don't really like trading that close to earnings, but what I do want to show you is how stocks break a pattern, some consolidation, then it breaks out of that, pulls back, goes up, pulls back. Now we're going to watch it and see if it's going to do this again. But we've got to watch for earnings right in here. See what happens after earnings. That's what we've been looking for the market to do, is to start trending with nice little pullbacks. Much easier to trade a trending market in as far as entries, but it's harder to stay in them because you have to stay in them longer than in consolidation markets. So you have to practice some discipline to stay in the trades. Silver and gold we looked at and traded a month or so ago. We had been watching for them to break out. That's what they did. And now they've gotten overextended from a candle count perspective and distance from moving averages that we crosshairs traders watch. And now look at what it's doing. It could be starting the same consolidation, and this could be what's called a continuation consolidation. And all I mean by that is it's going to continue its last move after a consolidation. So we've had a consolidation trend and now another possible consolidation. Let everything come back home, as we call it, and then get ready to go back out on the road again. SLV, same thing. This was SLW. SLV is your silver. Take a look. Nice crosshair on the daily, on the weekly that we had back several weeks ago. You can see it broke out here on our crosshair, busted out of the highs, but now it's gotten a little extended, and we want to watch it now consolidate, probably take it a couple of weeks, and then maybe do exactly what it did back here. It may even take it longer. The longer the better. The longer the consolidation, the bigger the move once it busts out. All you got to do is look at this stock, look at IBM, and you can see that, and we've talked about IBM. It had this long consolidation, and then it did what? Broke its pattern. If it ain't broke Don't trade it. Broke its pattern, and now it's had earnings, and now we're going to see if that trend will continue after a few weeks of consolidation. You know, it's very easy if you just focus on a few things to really trade the stock market. Last one, GDX. This is our gold miners ETF. Same thing that gold and silver is doing. It broke out of a range, and we traded this up to a resistance area. Then it busted out of that resistance. We didn't get excited about that because of the extension of the move here. We didn't want to get in on the caboose as the train was getting ready to go over the cliff. So now it's pulled back hard, which is what gold and gold stocks will do. They'll beat you up if you're not careful. Now what we're watching is for this to consolidate again for another possible move. Folks, remember one thing. Stock trading is easy. It's the stock trader who makes it difficult. Have a wonderful day, both in and outside the charts.